Hello from Fairshare IT Services. Customizable trading solutions with Zerodha API integration is a portal or platform for someone who has ideas about coming up with their own trading strategies, like their own portfolio, which needs like automated or semi-automated actions on a regular basis. But they are not able to do that using the existing portals or UI that is provided by their brokers. So this is ideal for that. So this particular instance is using rebalance strategy, and there are a lot of terminologies here that are finance related, obviously. So, and thanks to Sachin Ashtukar for explaining us like those various financial terms. So here, what we are trying to do is that we are using the rebalance trading strategy logic, and this is just an example, one of the examples, like the way the client wanted. But then what we are planning to do is that as you as a particular client need its own strategies, like will need to record this and deploy the instance as per their requirement. So you can visit azdp.atilagu.com for further details. Now, like in this example, as it is clear that we are integrating with Zerodha, so obviously the login and all that will be to Zerodha account. You have to remember that this is a really like two parts in this. So one is where we show the simulation, so no actual trading happens, but there is one section where the real trading also happens. So let me show exactly how it looks like. I'm going to log into Zerodha. Now the OTP is sent to my mobile, so I'm going to enter that. All right. So I'm logged into the application right now. Okay. So now one important part here is that the profile. So let me go to profile section first. So as you can see, there is a date of birth which is required, and you'll come to know about why it is needed, and the P value. So this is actually Nifty 50 P value, right? So you'll get to know about that soon. So now let me go back to rebalance. So these are my strategy instances that we call it. So all of these are based on rebalance type of a strategy. So what we are doing is that we are trying to rebalance between a equity instrument, like in this case we are trying to use Nifty 50 Bs, and then we are using Bharat Bond ETF expiring in April 30 as a debt one. But this is generic enough. Frankly, you can also use this strategy to rebalance your assets between, let's say, TCS and Infosys, right? So now how does it work? So I'm not gonna touch this, the one with no, because it's not simulation, it's gonna trade real time at Zerodha, so we are not gonna touch that. So here there are three types of strategies. Like the first one is manual. So in case of manual, we decide how the things will be balanced between equity and debt instruments. So here I have decided to set it as 30%, 70%, and 30% respectively. So I'll just show you quickly add strategy. So here you can choose the type of the strategy. Let's say in this case I set manual. I clicked on next, and here I can specify exactly whatever I want, including whether it's a simulation or not, right? Okay, so adding strategy is like quite simple. Similarly, if I choose like by age, then what happens is that there is a description here also, right? So age decides your debt percentage, and equity is 100 minus debt, right? So here, since in the profile I have already given my birth date, so it has automatically calculated what is the debt percentage, and then the equity percentage and all that. Okay, so now let me go back to rebalance. Right, so here there is manual, there is P by age. I'll explain like those one by one. So we already talked about like how it decides the by age rebalance. Now there is P also. So based on Nifty 50 P, if I click on add, if I click on P, then you will see that this is the formula that, or the logic that we have used to distribute it. So again, thanks to Sachin Ashtokar. So if P is less than 9, then the equity percent will be 80. And again, whatever we are trying to explain here, the standard disclaimers apply. We are not financial advisors. We are technology people, including Sachin Ashtokar. So what we are doing here is that we are telling you that this is the platform that we have built, and then you can come up with your own logic at your own risk, and we are just going to code for you and then give it to you. You can do, like, do your own testing and monitoring. Okay, so this is the logic that is used for P. Then okay, let me come back here. So now how does this like work per se on a regular basis? So what I'll do is, like, right now if you can see, like, I don't have any funds here. Okay, any funds here. So first I have to make sure that when the actual strategy instance is not simulation, right, then I have to make sure that the funds that I have deposited at Zerodha, like, these funds are less than that, right? Otherwise it has no meaning, the strategy won't work, right? But in case of simulation, here we are going simulation, so we can do whatever we want in these things. So we can fundamentally put in any amount as the funds, we can claim that we have those funds. It's not going to go to Zerodha anyway, right? So let me add funds here. So here, add funds, I'm going to choose 1 lakh rupees, and I'm going to submit. Okay, so now as you can see, I've got 1 lakh rupees sitting here, and the manual distribution that I have set is like equity 70% and debt 30%. So I just need to click on details. I can select all and do it as well, but then, this platform is like evolving with a lot of things that are continuously happening, so I don't want to show you select all right now. Okay, so then I'm going to click on select, and then I'll decide rebalance, right? So now I don't have to think actually, what is the real time market price, nothing, because it is actually connecting to Zerodha. It is finding the current price in the market for both the instruments. It's going to find out what is the total amount that I have, the new funds that I have, and then it's automatically it is distributed. And in case of real strategies, it will actually go to the market and execute, right? So now let's say that after 3 months you come back, and then obviously the equity price has increased, debt debt position has also increased, or it could go either ways, right? There are all kinds of permutations and combinations. Now depending on that permutation combination, if I select this again and then rebalance, then if the variation is more than 5%, then only it will take some action. If it is not required, then it's not going to take any action, right? It will just leave it as it is. And then whether, like, you can also see, like, like, there's one more important feature here, audit log. So if you go to audit log, then if it has taken some action, these are all simulation mode, right? Nothing to worry about. If it has taken some action, then it will tell you here, and then of course it will get reflected here as well. So in this case, we have just created this portfolio. So if I rebalance this, then not much is going to happen, right? If I click on details again, then nothing has happened, right? But I'll show you, like, in case of, the P1, that the effect of that, right? So right now, when I created this, the P is around 23%. So that is why it says that, like, it has, because you have tried to rebalance it automatically, it is saying that since the P is 23, we would like equity to be 32%, and this to be around 68%, right? Around rounded, about rounded, right? So now again, I'm going to do is that I'm going to add funds here also. Okay, so again, 100,000, submit. Yeah, and then click on the details again. These are the new funds, and click on rebalance. So once I click on rebalance, then it's of course going to distribute accordingly, right? You can see that the approximately it has done it. Now why approximate is because sometimes, it the prices of the instrument are like on a higher side, so it cannot like minutely, kind of distribute that. So it's always like roundabout, and you have to accept that fact. Now let's say that the P in the market has changed. So currently this is manual, by the way. Yeah, so P in the market has changed to, let's say, 8. I hope this doesn't happen in near future, but let's say P is 8, and then I click on submit, right? Now what's going to happen is that if I go to P, I click on details, right? Just observe this, right? In case of equity position, it is 34,000, and this is 65,000. So I'm going to click on select, and I'm going to say rebalance. Yeah, so here it's telling me that, that you must make sure that the P ratio is updated from the profile. Okay, click on OK, then click on details. As you can see, the P value has drastically, because of P value, the equity position has gone up to 80%. So that's the logic. If the P is 9 or less, then it's going to be 80% in equity and 20% in debt, and that is what exactly it has done. So this is where the this particular platform comes to help, that if you create like multiple instances of strategies, then you can do the rebalance like almost automatically. You have to, because of the SEBI rules and all, you need to come here, log into via Zerodha and all, and then take action. But then now the it has become very fast to rebalance, and also it is now almost zero errors, because other than those minute differences because of the what you call it, as it cannot round it right up to the last price and all that, right? But otherwise it has done like all of that for you. You don't have to worry about that, right? So this is exactly the best use of using this portfolio. And if you have any other ideas about your own trading strategies and you would like to semi automatically do it, then please do contact Fair Share IT Services. So thank you everyone for watching.